Welcome to 2022 and another edition of Let's Talk Money.
Well, yeah, let's take a moment and give God a little glory for just making it through another crazy year.
Yes,
Great, it's
totally.
been crazy with blessings and crazy with some challenges, but through it all, we are still here.
And
God is giving
grateful.
some glory. Ay, hallelujah.
And grateful, yes.
Yes.
So please, as we always say, subscribe. Hit the bell notification so you'll get alerted when we have new content. And please
Share,
share,
share, share, share.
and like this page. We're going to have some really good guests on for 2022. And we don't want you to miss all these wonderful nuggets.
Yes, it's gonna be amazing. I am so looking forward to it. Like, I'm excited.
Yeah.
I'm excited.
So,
We
today,
thought we'd start this year off with a conversation about taxes. Since it is that time of the year, there have been some changes made, and we have Sister Rhonda Hall, CEO and lifestyle strategist, who is with us today. Rhonda, welcome to Let's Talk Money.
Thank you. Thank you so much for having me. I'm excited.
Me too.
yeah. So, go ahead and just tell us a little bit about yourself.
Well, sure. So, again, I am the owner and CEO of OCD Financial. OCD stands for Obedience, Character, and Discipline, which are
All
the
right.
principles that the business was founded on, and and we believe that it takes to have financial freedom
Love
in all aspects of the financial world, personally and in business. Been in business for a little over 7 years now, and just provide a gamut of financial services.
I love that.
Yes.
Love it, love it, love it. So, so how did you get started with OCD?
I can honestly say that the business and the name was truly divine orchestration. The basis of the business is out of Deuteronomy,
Mm.
Deuteronomy 28, and being obedient with your money, and that was pretty much the beginning of it. And then it just morphed into so many additional things. But I've always just been a lover of numbers, and I've always been big on money management, budgeting. I actually enjoy budgeting. It's almost a hobby to me.
Well,
But that's how
that's the first.
I know, right? But that's how the business came about, is basically on that principle of being obedient with your money. Yeah. And
That's
OCD
awesome.
was born. Yep.
Cool. Great
That is
story.
awesome. Yeah, that is. So it's tax time, probably your favorite time of the year. Anyway,
Right.
bittersweet. No, right? Yeah. So what new tax laws have taken place from 2021 into
Yeah.
2022? What are those things we need to highlight specifically for our listeners?
Yeah, well, first off, I would say that last year, or these last couple of years with COVID, has been one of the most dynamic changing tax years ever. And so it wasn't just enough to know what the changes are going to be from one year to the next. Last year, we dealt with changes in the middle of tax season, and that happens very, very rarely. So I say that to say, not even knowing what could even possibly come with this upcoming tax season, maybe some changes at the last minute, those sort of things, especially with the increase, in COVID cases coming back. We just don't know. But I will say that on a norm, we generally always see an increase in the standard deduction amount. So of course that's going to increase. We have something that we had last year for 2020 that we will have again this year, and that is being able to claim your stimulus, the 2020 stimulus, the last one, the third stimulus check. If you didn't receive it in 2020, you can now be able to claim it on your 2021 tax return. So that will be something new added. Um, um, Something else they're repeating from last year, which was a first time, is you once a time, or prior to rather, in order to claim like your charitable giving, you would have to be an itemizer. You need to itemize your deductions to be able to claim that. Well, this year, for the second year, they are actually allowing you to write off, or to deduct, I should say, up to $300 of your charitable giving, even if you take the standard deduction. So that's
I didn't
kind
know
of a
that.
first.
Yeah,
Okay.
I didn't know
Yeah,
that.
so just a couple little changes there.
So I was wondering about unemployment. I know that last year I think they allotted like up to $10,000 or something that you didn't. Are they going to do the same for this tax season?
That's a good
Yeah, so
question.
I have not heard of that being repeated. That may have been a one-time deal for 2020 with the COVID relief, because a lot of the laws that went into place with the COVID relief bill ended at the end of 2021, if not already.
Mhm.
So there has been no new tax laws around COVID relief that have been released yet.
Okay.
So that means that any unemployment received in 2021 will be taxed, basically.
The entire thing, for that
Yeah.
matter.
Mm,
So like you
the
said,
entire
last
amount.
year was $10,200, and then anything over and above that was taxable income.
Okay.
But yeah, so next year maybe that entire thing.
Ooh, better, people better
Back
be
back
ready.
right. That's a
Right.
whole
That
nother
is
story, because that can be a surprise to many, because taxes aren't withheld from unemployment, and so it's a
right.
surprise. Yep, yeah,
Yeah.
I see that a
And if you
lot.
don't have enough
Set aside.
deductions, yeah, or all of that, then you can end up owing quite a bit.
That's right. That's
You
right.
know, anything is a lot if you're doing unemployment. So I mean, like, or
Right.
it should be a lot,
Not,
period,
and not
Yeah.
prepared.
and not preparing.
Totally.
I always say a tax balance is always a lot when you don't have it. So
Exactly.
that's my thing. It doesn't matter where the income came from, whether it was wages or unemployment. If you don't have it, it's a
It's a
lot.
lot. I like it, that saying, but
Yeah.
yeah, like it is.
Yeah.
Yes. Oh my God.
Oh, shoot.
So I know we have a lot of people who have been receiving child
Child
credits
credits. Yeah.
this year. So let's talk about that just a little bit too, on what happens if you've been overpaid or underpaid. How does that affect taxpayers?
And what it really, so that folks won't be surprised.
Mhm.
You know
Yeah,
what
so
is it that they need to look at.
definitely. So everyone who has been receiving those child tax credits in advance should receive a form from the IRS. I don't know the number right off the bat, but just like when you got the stimulus checks, the IRS sent you a little notice or whatever
Mhm.
in the mail saying this is what you got. Well, you should get one for those child tax credit payments as well. And so I would recommend that whatever your total is on there, that you double check it to your own records or to your bank account or whatever. Okay, make sure it's right. But when you go to file your taxes and do your tax preparation, you will need that. in order to show how much you've gotten already, because your tax preparer will add that to your return. Now, if you have not received already how much you should have received for the year on your return, then you'll be able to get that difference and it'll be added to your tax return in the form of a refundable credit. If you have over received due to whatever type of changes, whether you receive the money throughout the year as payments, but when you go to file, maybe those children don't live with you, or it wasn't your year to claim, so you should not have received them, then when that's calculated on your return, then yes, you will owe that back and it's going to show.
So you better make sure that you were supposed to be claiming kids, basically.
Exactly.
Oh,
That's
But
a very good point for people that share,
yeah.
the children. If it's not your year and you've been getting that check, ooh,
yeah.
ooh, I'm gonna tell mama.
But isn't that how, literally that's how everything around taxes works that way. And so, because taxes are really a reconciliation of your tax debt or your tax liability. Tax season is a reconciliation of the year before. And so that's why it's so important to know or to match or to be as accurate as possible throughout the year on what you claim, because the reconciliation after the fact is the truth. It will shine a light on anything over and above that you collected, or that you were short of, or where there's an overage. But that's what it is. It's a reconciliation on the back end.
That's so good.
And I think this is a good gateway into your thoughts on owing or getting a refund or breaking even, and why you think the way you do. If you can share that with the listeners.
Definitely. So my perspective, I'm gonna go on a limb and say, as should everyone else's, the goal is to break even. The goal is not to get a refund. The goal is not to owe. The goal is to get as close to zero on one side or the other as you can. Because back to that point, like you said, when we're talking about reconciliation after the fact, what you're doing when you are paying your income taxes throughout the year is you're paying them according to a speculation of how much income you plan to make for the year. And so taxes are merely a statement after the fact saying you either paid too much or you didn't pay enough. That's literally all it. You're not getting anything extra from anybody. It's not a reward. It's not a gift. It's your own money. It's not a present from the government. None of
Right.
So it's nothing to celebrate. A refund is not time to celebrate. It means that what you did was you overpaid in advance and you allowed the IRS to have a no interest savings account for you all year long. And we
Wow.
know from money, that's not smart in any case to have a savings account where there's no sort of, no interest.
Exactly. So to that point, I love it when you said if you have money to give away like that, and who does? So you can take that money and invest it yourself.
That's exactly right. So if you calculate it correctly with what is your your prediction statement, I'm kind of making that up, but we're talking about tax season is reconciliation. So what do you fill out on the front end to gauge what should come out? That's the W-4 form. And so a lot of people have been employed on their jobs for years and they filled out the W-4 one time, but we forget that that should really be something that you review annually according to the changes or not within your household. So if you add a kid, take away a kid, married, now you're jointly, if you know something's going on, maybe with your spouse, and this year's better if you do separately, whatever that change is. One of the biggest things I've seen over the last couple of years was when a child turns 18. And so normally a parent may have gotten $2,000 back for that child because they were getting the child tax credit. Well, now that that child's 18, they only get $500. So their W-4 is filled out for someone who was going to get a $2,000 child tax credit. But when we reconciled on your taxes, you only get $500. Now, guess who owes $1,500 to the IRS now? Because they didn't predict in advance and go at the beginning of the year, change that W-4 to now I have a dependent who is over 18. I no longer get. So it's those sort of things. Your W-4 should be reviewed on a yearly basis so that it is as accurate as possible to your tax preparation and that reconciliation that we're talking about.
This good stuff. I'm like, that girl good.
All right, drop the mic.
That girl good.
Yes.
But I just, I feel like the language makes it so clear.
Yes.
Like, and easy to understand the language that you're using to explain these things. It just makes it so clear and so much more easier to understand. So
yeah. And that's a big part of my, I actually I get gratification in knowing that my clients now understand the strategy of tax preparation. There's not a fear that if I teach them too much, they're going to go and do it themselves. It's like I want them to know. People need to know. Everyone needs to be educated and know why you're doing what you're doing, because when we gain the knowledge behind something, then we can reduce the fear behind it too, and the frustration. And so when you say tax season to the average person, they sigh, they take a deep breath. Nobody wants to talk about it. It is a thorn in their side, and it does not have to be that way. So I just try to tell people that tax season doesn't have to be stressful, and you don't have to be worried. It doesn't have to feel that way, but it's after they learn and they're educated versus being those clients that walk into a tax preparation place. No one answers questions. And so I always say that people go in there with their W-2s and their fingers crossed. And you drop it off, right? Or you sit there while they on the computer because you have no idea what they going to be and what they praying about the whole time. Please don't let me
yes.
And it doesn't have to be like that if we just plan ahead and know what it's really all about.
Guilty. Oh my goodness.
So what are some commonly missed deductions that people may not think about? Like you said, you go in there and you're putting everything in the hands of the preparer, and you are really not educated enough to even ask questions or know what to, spark up in it.
Yeah. I will say that individual taxes are, I'm going to say not cut and dry, but until you get into where you are an itemizer, that's where the different list of the additional things comes in, right? That can be forgotten. But when you use like the standard deduction, most of that stuff is pretty clear. And
Mhm.
with the change in the tax bill, whatever year it was, 18, where the standard deduction was almost doubled at every level, um, that kind of knocked a lot of people out from itemizing because the standard deduction went up so high. You can now add your mortgage in there. You can add, mortgage interest. You can add your charitable deductions and those sort of things. And it's still not more than the standard deduction. So you have so many people now who used to itemize that they don't even need to gather all that stuff anymore. So they're not even forgetting anything anymore. Whereas before, we'd be like, well, hey, did you so certain things that you forget when you itemize, hey, your all kinds of your property tax on your cars, every car you have, property tax on the house, the mortgage interest, any points that you may have paid for if you just bought a new house, those medical expenses that you have over and above, 7.5% or whatever of your gross, which is another application. But that charitable giving, that donation, donations to those um, to like the Salvation Armies and they're just charitable organizations.
Goodwill, all that.
Yeah.
Mhm.
But that new bill did away with some of the additional things. Like, you used to be able to write off like membership dues, union dues, stuff like that, which were other expenses. But with this bill right here, they did away with those things and then up the standard deduction. So really it's really kind of simple anymore right now during this season until 2025 when that tax bill ends.
Okay. So
Hmm.
I guess more so for business owners, when you start thinking about the itemizing and not
Yeah,
leaving
that's a whole nother baby. So yeah, so for business owners, I found that the biggest complication is understanding mileage
Mhm.
and understanding home office. Because when as a business owner with business taxes, it's clear. Well, I can write off my products. I can write off all the things it takes me to provide the service or provide the product. Those things are easy, that overhead and those expenses. But the understanding of the mileage, the fact that there's a choice in how to calculate it. You have the short version or the long version, and then it's kind of the same concept with home-based business, what you can write off at your home versus just taking, square footage,
Mm.
deduction, that sort of thing. When can you write off your mileage, from what point to what point? Those sort of things seem to be the most difficult and just need to be clarified and explained.
Okay.
Sounds like a winner.
You got any more questions for the tax lady?
Girl, I was thinking about something. Um, I was wondering if you had any tools or recommendations on tools to help with like tracking mileage and different things like that you're aware of that help when it comes to this process.
Definitely. So when my business clients ask me how they should track, I give them two options and then let them know how to determine which one is best for them. So there are automated mileage apps, for example, like MileIQ, or for business clients that use accounting software like QuickBooks, there's a mileage feature inside of it, right? And those things are automated because they put the GPS on your phone and track everywhere you go. And then you wind up and then you look at the results of everywhere you went. And the way it works is you swipe left if it was like a personal trip, and you swipe right if it was a business trip, right? So you go
That's
down the
easy.
list of everywhere you
That is
went.
way easy.
Yeah,
Yeah.
so it's literally that simple. And so you swiping left or you swiping right, business, personal. Now here's how you determine if that is efficient for you though. If you are someone who drives much more personal trips
Mhm.
than business, then just imagine that if you went let's say you did it once a month and you pulled up your register of all of your mileage trips for the month, but the majority, 80-90% of your trips are personal than business, you just gonna be sitting there swiping the whole time. You just gonna personal, 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 personal. Who wants to do that? Because
Right.
now you're really just tracking your personal life. And I don't need a recap of everywhere I've been all month
No,
long.
don't.
Right.
You got kids and you ripping and running, taking them every place under the sun. So if your majority of your trips are personal, then I suggest you keep a more manual log
Mhm.
of your mileage trips, which can just be a notebook paper or however, with the date, where you went, and the mileage from the place you
Mhm.
started to the place you went. Now, I myself, I keep everything on my calendar in my phone. That's just my own little personal resolution to that because I got the whole personal thing going on. So I found that the apps don't work for me. But if you majority of your driving is business, then definitely use the app. But for me, on my calendar, when I book an appointment that is outside of my home office, I preface that appointment with OCD. So if I'm meeting someone wherever, I preface the meeting invite with OCD. So when I look at my mileage, I can search on my calendar and I just put in OCD. So every trip that I made comes up and everywhere I've been is right there. So,
Mhm.
so that's just a little interim way, of tracking, but everybody just can do whatever is best for them and more efficient because it's all about saving time.
For real. That we already don't have.
Oh,
I feel
God.
like we don't
Feel
have.
like
I
it,
know,
yeah.
right? Never enough.
Yes. No, I feel like this has been some great information and at least gets people started and ready for the new year to
Yeah.
get those taxes together.
And thinking about it, yes.
Yeah, and maybe have less to pull together because she made me think that I don't think my things add up to that standard deduction. So it's
But you have
not
to
even
think about your
gathering that. I do have to
business.
think about the business part,
Yeah.
but yeah.
Yeah, just write off, just simple things like, get a manila envelope. And as those things come in the mail, start to come right after January
Mhm.
1, just drop it in there. I even tell my client, like, hey, you don't have to open it. If it say tax, you don't even got to look at it. Just put it in there,
But
bring
then
it
the
because
mhm.
I get a kick out of cutting off the perforations on the edges. I don't know. I just want them all. I want them real, real neat. So I'll be like, don't tear them off because you're gonna leave all that meat on the side. So, but
Talk about OCD.
yes, yes. So that's I said. Just put it in an envelope. Everything that's taxed, I just put it all in there, and then you can just take your whole envelope to your tax preparer. They'll go through and they'll tell you what you need and what you don't need. And if you do want to know in advance, know what your standard deduction amount is. So if you simply know your filing status, married, filing jointly, single, head of household, if you know that your filing status and equate it with your standard deduction, then you can just look at your own sheets and be like, okay, well, let me take the two main things, which is normally charitable giving and mortgage interest. If you add those two things up and it's nowhere near your standard deduction number, then most likely you're going to take the standard. And so that kind of lets you know if you're going to even need those forms or not.
Yeah.
And then, so can you just go through for the listeners what the standard deductions are for head of household, single, and married couples?
Yeah, so I believe that the new year single and married filing separately is being increased to $12,550. That's up from 12,004 last year. Married filing jointly is 25,100. So it's basically, two singles together. It's just double. And then head of household is $18,800. So that's those three amounts.
Cool.
Those are pretty high, though. I mean, like, those are good amounts when you think of deductions, like
Exactly.
18,000. Yeah, that's
Yeah,
Yep.
yeah,
not bad.
So
it's not.
even a single person with children, I mean, if you're paying, mortgage interest, and let's say, you got $6,000 in mortgage interest, that's a pretty nice house, or depending on where you live as far as
Mhm.
that. And then, then tax wise, your property tax on the house may be $2,000. So you're only at like 8 now. And then, depending on what you gave charitable giving, maybe you gave 6, 7,000, you're still at 15,
Mm-hmm.
so it's so hard now with the numbers being,
Right.
so high.
So
Yeah.
is childcare included in that? You know,
No.
okay.
Yeah, childcare is its own baby.
Okay.
Look, no pun intended.
No, that's good. That's good to know, though, that
Yeah.
the child care piece in there.
Mm-hmm.
So,
Cool.
well, yeah. Thank you for joining us today. This has been a lot of good information. And if people are looking for a new tax preparer, how might they reach out to you?
Sure. So multiple ways. I can be reached through my website, which is OCD Financial. Can always send an inquiry through there. I have a Facebook business page, OCD Financial. You can reach out, message me on there, or you can just call me directly. 816-423-9023 is the office number. Or you can feel free to email me at info@ocdfinancial.com.
Great.
Sounds good. Thank you
Great.
for joining us
Yes.
today.
Thank
Thank
y'all
you.
so much.
Happy tax time.
Yes, it's coming.
And Happy New Year to you. Have
Thank
a
you
blessed
both.
year. Many blessings to you.
Yes.
Thank you both. Wishing you both prosperous years.
Thank
Thank
you.
you.
Yep. Appreciate you.
Yes, well, we'll be talking to you soon.
Sounds good. Looking forward to
Okay.
it.
All righty.
Okay.
Well, there you have it, guys. Get them taxes done.
Get them taxes done. Be prepared. Do them on time. Avoid those late fees and penalties.
Yes, you have been watching, listening to, tuning in to Let's Talk Money. Like, subscribe, hit the bell notification. We out. Hey guys, and thank you once again for tuning in to Let's Talk Money.
You can find us here every Monday at 8 a.m. Central Standard Time.
Yes, so be sure to subscribe and hit the bell notification so that you will be alerted every time new content is aired.
Come on, y'all. Tell your mama and them, your cousin them, all of them.
Tell them all.
Tell them to subscribe and listen to Let's Talk Money.
Yes, and be sure to leave us some comments. Chat with us. We'll be chatting live at times, so chat with us.
Hey, remember, your money mindset matters.
As a man thinketh in his heart, so is he.
Peace, y'all.
Peace.